Let's just focus on Avenue Supermarts, which is D-Mart. And let's go across to Mangalam to run us through what the quarterly update looked like. Mangalam, over to you. Morning.
Good morning. So, D-Mart, is lower in today's trading session. There were no great shakes in the quarterly update. Nothing really to write home about on both the upside or the downside. Why do I say that? Because, the standalone revenue grew at around 15.5%, which is pretty much in line with their 3-year average of 15.8% growth. So, no great shakes on either the upside or the downside. They've added 8 new stores in this quarter, which is basically, the first half of this year. Around 17 stores is what they've added. The company has been looking to accelerate their store addition, so that's something we'll be watching out for going forward. Year on year, the store addition has been 14.5%. So you would say 15.4% revenue growth, store addition of 14.5%. Implied same-store sales growth is on the lower side, closer to around that 1% mark. The reason why the stock is sharply lower, despite having corrected from levels of around 4,700, 4,800 earlier, is because the street believes that going forward, the reported revenue would be a lot lower than historical rates because of the impact of GST cuts. So now something that was charged at around 18% or 12% coming down to 5% would imply that the MRP goes down, and as a result of which the D-Mart selling price goes down, and that would reflect in their revenue. So volume growth will be very important to track. Performance of D-Mart Ready is something that the street will be tracking, as well as quick commerce speaks about competition easing out. And finally, the store addition outlook, because that's something that everyone's pinning their hopes on when it comes to growth for D-Mart coming in, especially from Uttar Pradesh, where they recently opened a store.
Okay. All right. So Avenue Supermart under pressure today after that Q2 update coming through. Mangalam, thanks very much for that.